Everybody knows that you have to have good credit in order to qualify for a mortgage. But did you know if you make subtle little changes to your credit scores, it might prevent you from actually closing on the house? It could blow the whole deal. Let's find out. Stick around. Hi, I'm Marty, broker owner of Mr. Palm Bay Realty, and today we're going to talk with Ashley Stockrahm from Certified Mortgage Planners, and she's going to go over 10 do's and don'ts that can affect your credit during the loan process. Okay, we're with Ashley Stockrahm of Certified Mortgage Planners, and today we're going to talk about some credit do's and don'ts because she has this wonderful flyer she hands out to people, and hopefully it'll help somebody when we talk about it. So, Ashley, why is credit so important?
You need to have your credit in line for qualifying for a mortgage. Everything needs to be current and a good history. They usually look over the last 2 years. So maintaining good positive credit for at least 2 years is important.
So the better your credit is, the less interest you pay?
That is exactly correct.
Cool. All right, so we have to watch these things. So what's your first do's and don'ts?
To stay current on all existing accounts. The reason is because 130-day notice can cost you the loan. It'll ding your credit score can drop because of it, and it can do away with the idea of you even purchasing a home at that time.
Okay, and I see one of your do's is do continue to use your credit as normal. I would figure you want to not use it.
Well, you want to keep it in rotation how you normally use it with your regular spending habits. So if you're normally using it to get gas or anything like that, then that's acceptable. Typically buying all your furniture at one time, maxing out your cards and that sort of deal is where that'll actually hurt you.
Okay, and the next thing says, do call your loan officer before making changes.
Yes. I like to discuss it. Just run it by me. Make sure that whatever you're going to do is going to be acceptable or something that we can work with so we can plan on how we need to address it if need be.
Okay. What's the next one?
Don't apply for any new credit. So don't pull any new loans out, any credit cards, open any furniture, anything that would allow you to open up credit, even to save on a spending. If you open up a TJ Maxx card and to save the 10%, do not do that. Opening up credit will require us to have to repool your credit and can potentially drop your credit score.
Have you seen people do that?
Yes, a lot, actually.
Oh, wow.
Right.
So how about closing out accounts?
You don't want to do that either because that can impact your credit score. That can drop your score. I've seen somebody's score drop almost 70 points for closing a card out. So you definitely want to avoid closing any cards as well, as that can hinder the process.
Okay, and what's the next one says, don't max out or overcharge your credit accounts.
Correct. So when we do your debt to income ratio, we're using whatever your current balances are on your credit cards. So if you max your card out, that can change the payment, which in turn goes up against your debt to income ratio, which ultimately can change your qualifying ratio as to whether or not you'll qualify for what we're trying to do. So essentially, you want to keep everything the same and not make any big changes to your credit, and opening up credit cards or maxing your credit card balances out can definitely do that.
Okay, I see the next one is don't consolidate your debt. I thought that was a good thing.
Well, it can be a good thing, but you don't want to do it while you're in the middle of the loan process, because in doing so, your debts and everything that we are accounting for is being moved around. And at that point, it can cause a little bit of confusion. We'll have to go back and repool credit and get the numbers correct, which in turn can mess up your ratios again and put you in a position where you may not qualify.
That can hurt you, I bet.
Yeah, absolutely.
Okay, don't deposit any unsourceable cash into your bank account.
Right. So any large deposits have to be sourced. You cannot source cash. This is common where people have money in a shoebox at home and they slowly deposit cash into their bank account. We're required to verify where that money's coming from, and you cannot verify cash from a shoebox. So a lot of times you want to avoid having that. If not, you have to allow it to season for 60 days for us to not be able to question it. So you want to have all of your finances and money in order in the bank accounts that you plan on using prior to actually going on contract, because you are at risk of having us to source it. If the money is needed to close and we cannot source it, then we cannot use that money to close. So for example, if you put $4,000 into your bank account and that money is to be used for closing, but we can't source it, we now have to back those funds out and allocate another $4,000 to use for your down payment and or closing costs.
So what do you mean by sourcing?
Sourcing meaning can prove where it came from. So if you receive money from a family member and the family member gives you money to put in your bank account, we then have to source that, meaning that we would need to get verification of where that money came from via canceled check and bank statement. You're asking for they then become a donor, which would be as if you were receiving a gift. And we have to verify where it came from via documentation. And that goes back to cash. You can't document where cash is coming from versus it coming from someone's bank account per se and able to prove that that's where it came from.
So if a relative gave you like $4,000 or $5,000 towards your closing costs in cash, would they just be able to write a letter? Was that good enough?
Nope, it is not good enough. You'd have to source where it came from. So if they're giving you money, that money needs to be able to be sourced as well, because cash cannot be sourced.
Oh, so you'd have to like track it from the relative's
bank
bank
account.
account to this bank account.
Yeah, preferably a wire transfer or just a written check, a canceled check copy along with the bank statement showing the funds coming out of the donor's account. Donor being the person giving the money.
So donor giving a check is okay, but donor giving cash is a no.
That is correct.
Gotcha. Interesting. Okay, and it says here, don't take cash advances from credit cards. Why not?
Again, that changes the balance of the credit that we're using to qualify you. So if you're taking cash advances, that money is additional money that you're going to have to end up paying that we're not accounting for. And it can definitely alter your debt to income ratios and turn into you possibly not qualifying for the loan. And you definitely do not want to risk that during the process.
Okay. And the last thing it says is don't change your employment.
Yeah, so this actually happens more often than any of them, actually. You don't want to do that because we're qualifying you off of the income. So the income that we are using, you cannot change. We have to verify that you're still receiving that same income at the end. In the event that you do, in some cases, we're able to overcome it if the job pays the same. It just requires additional documentation on top of what we already have, and we have to update everything. If you have to do it, by all means necessary, you definitely want to have the conversation with your loan officer to make sure that the move is even going to allow you to still qualify for the loan at that point.
Even if it's a job where you make more money?
Well, you can, but depending on the type of job and depending on the income type, if you take a job where you're previously a W-2 and you take a higher paying job that's a 1099, now you need 2 years proof of 1099 income to qualify.
Oh.
Right. So it can totally alter your approval based off of what the job is. So you definitely want to have that conversation with your loan officer regarding if that's a safe move for you or not.
Okay. So I guess basically bottom line is, if you have a question, call Ashley.
Right. Absolutely.
All right. All I'm going to do is I'm going to put your contact information in the description below. And if somebody has a question, they can give you a call or shoot you an email and go from there.
Awesome. Thank you, Marty. I appreciate it.
All righty. We'll talk to you soon. Take care.
You as well. Have a great day.
Bye.
Bye.
If you made it this far in this video, you probably like what you're seeing. In that case, hit that subscribe button below. and you'll be notified whenever I put up a new video. If you're considering to moving into or out of the Palm Bay area, call me, text me, or leave a comment below. I'll be glad to help you out.